Hello and welcome to ETCFO. Today we have with us Subhadra Rao, who's the Chief Economist of Yes Bank. Hello, ma'am.
Hi.
Ma'am, we wanted to know that the GDP numbers have further slowed, further come down. So, what does this mean for the economy?
Well, I think it was widely anticipated. High frequency indicators, be it on the consumption side, the production side, the energy use, the oil consumption, the non oil, non gold imports, plus the volume data of core sector, all of these were pointing towards a sharper cut for the second quarter. And that is what has got corroborated in the numbers today. But do we see that further deceleration will continue in the third quarter GDP print? Probably not, because October, December is usually more consumption heavy quarter, and the festive season has somewhat buoyed the consumption, which for the first half of the year was relatively weak. So we believe that third and fourth quarter will definitely fare better than the first half of the current fiscal year. But having said, the first half has most likely around under 5%. And that is the reason why we believe that even if we see an improvement in the second half, the overall GDP could be around 5.5% for the full year. If you go beyond the current fiscal year and start for the next fiscal year, I think reforms are getting well underway, work in progress, but they will start yielding results by the time we complete the next fiscal year. So for the next fiscal year, we do see growth improving by a fair margin. We could see a growth of about 6 to 6.5%. That's what we estimate at this point in time. Critical factors that we would be watching out is how soon the financial sector resolutions come into being, how soon the IBC stroke NCLT provisions get, become more orderly, which would create an investment appetite. And therefore, overall, once reforms start gaining momentum, we will see all of that in a shape of better and improved GDP trajectory. Let's not forget the other macros are in decent shape. We have rupee which is stabilized. We have oil prices well in the handle of 60, 65. The monetary policy has eased over the last few quarters. And overall, of course, the corporate tax rate having been cut, all these will start manifesting in positive enablers for growth, going more beyond the next 1 or 2 quarters. So, medium term, we remain optimistic, but of course, the key focus has to be on the last mile execution of all of the factors and reforms that the government brings it on the table for us to get to 7 to 8% growth. I think two factors are very important. Additionally, global economy needs to improve, and more importantly, domestically speaking, the next set of big reforms, which are more related to land and labor, I think those need to get under the implementation stage. Once we have that, I think India will be poised to grow at 7% plus.
Thank you so much, ma'am.